Hello guys and welcome to FX Market Strategy. I hope all of you are having a great day today. So today we're just going to discuss a little bit more educational stuff. We're going to discuss kind of charts. So all of us aware, please let me know if the sound has a problem. If the sound is good, just type the sound is okay or something in TradingView, also in YouTube. Okay. So is the sound okay? So please a feedback about the sound, just to make sure the sound is working good. It looks good to me here, just to confirm. Okay, is the sound good? Okay, so it must be good. I have been asking for 5 minutes if the sound is good, okay? Okay, hope it's good also in TradingView here, okay guys? So this will be like a beginner level, so please bear with me right here. So the first one we do have is a basic candlestick pattern, the Japanese pattern, okay? This one is super easy. You can see it's like a box. So if the price starts like here, okay, then we'll go up, then start coming down all the way here, okay, then we'll go like this and close. So that's the entry price right here where the price starts, okay, price ended, okay, and that's the high price, the highest level within the time frame, and that's right here is the low price, okay. So basically open, high, low, close. What's inside is called the body of the candle. So the between the make a box, and the low and the high, they will just put a line at the middle like this. Okay, it gives you the low and the high of the candle, something like this. Okay, so you get an idea about the candlestick pattern. Super easy, not complicated at all. So right here, that was the entry, that was the end, because that's a green one. So the end is a close price was higher than the end, the entry price. Okay, so that's why you see this green candle like this. When you see such a very strong candle like this, also indicates there was a lot of price movement within a small time frame. Okay, so there was a price movement. So that's basically is a candlestick type of charts. Okay, the Japanese type. It was invented long time ago in Japan. So there is no need to talk about the history. It's just for beginners. That's the candlestick one. Open, close, high, low. Okay. So just the second one right here. And that's the bar chart. Bar chart. So basically, it's the same thing like candlestick, but it does not have a body. Okay, so it will be a line like this. Okay, and it will give you a tick at the left side, and that indicate the entry price. Okay, right here, and that indicates the close price at the right side here. It's a Western one. This one. Okay. So that's open price. Okay, that's when the start of the candle, and that's a close price. Okay, and that's high price. Okay, easy stuff, and that's the low price. So it's the same exactly like candlestick, but so if you actually put a square right here in this area, okay, in this case it will be red because the open is higher than close. It will be candlestick. So in my opinion, the candlestick and bar does not have much difference. Only the body at the middle and the color. So not really much difference in my opinion. Okay, the bar chart is more clear. You can see better in it. So it's kind of sometimes it's better to for if you want to look at the bigger time frame and you want to cover, let's say 3-4 years. If you get candlestick, it will be too wide, but the bar chart is just going to give you a narrow one, narrow style. So it will be better from this point of view. Okay. The second one, so that's it. I'm drawing here. The second one will be the line. Okay, line, it will be based on close price. Okay, so that's a line. It does not what happened within a specific time frame. It will be continuous. So the main thing in the line, it will be continuous. Okay. So that's the main thing. It's continuous. It's not separate. You don't have each 4 hour by themselves like the bar or the candlestick. Okay. So this will be just continuous, attached to each other. Second one, it will be based on closed price. So let's say this price right here. I'll show you what does it mean. If I'm gonna compare this one, and I'm gonna put the Bitcoin USD, the same thing here. Okay. So what I get. Yeah, I got that one at the same thing. So I'm just gonna get candles right here. See, that's what I'm saying. See this line? It takes the close price and attach them to each other. Okay. You can change it. So what I mean by this, let's do the opposite. Let's put this as candles and let's put the other one right here as line. Okay. Then we can take this one and we can, that's close price. Simple. So it will take the close price and they will attach it to each other. See right here, that's a close price. See, that's a close price, close price. Let's see why it is not matching very well. Close. You can change this the source if you want to only attach the high to each other. You can attach the low. You can also make it like this. So with the line, you can get this shape, which is pretty cool, I guess. Okay. So they have different kind of calculation. You can get this one. This one is very good. It's open plus high plus low plus close divided by 4. Okay. A lot of indicators, you will be using the high low plus close HLC divided by 3. That's a very strong one, and many indicators and many traders use this one, HLC divided by 3, and you can use the OHLC divided by 4. This will give you average. Okay, so if you take this one, you see like that. So okay, so basically that's the line chart right here. In the indicators, so let's say use the MACD. So any MACD possibly you're gonna use is gonna be a line chart. See right here, where you can use it as a histogram or something, right? Instead of showing this as line, it could be shown as different things. Okay, if you do the option to do so, but mainly the MACD, or most of the indicators, they will be shown as a line here. They're not going to be shown as candles. Okay, so in study, to compare things together, get intersection, stuff like this, the line will be helpful. But in the chart, you don't really get much when you have the line chart. Okay, when you compare things together, it will be good. Let's say we want to compare the Bitcoin in the 1 hour time frame to, let's say, the Dow Jones. See what's going on. So the Dow Jones has been rising. Yeah. Here, the last hour or so. So the Dow Jones in a buy position. Bitcoin also has been holding right now. Okay, if you go to the half hour or whatever, like this, start to go up a little bit right here, and Bitcoin also. Okay, but if you change the Bitcoin here to bar or candle, you can see it here. Sorry, that's Bitcoin, and this one is orange one. 30. Yeah, this orange one is the Dow Jones right here. Okay. So if you want to compare two things, most likely you're going to be using one bar chart and the other one is line, or you can use both of them line. So that will be the use of the line usually to compare things. So if you want to look at the bigger time frame like this. So let's say I'll take this off. I want to see the relationship between euro dollar. Okay. So that's the euro dollar and the pound dollar. See how they're correlated to each other. Yeah, they're very correlative. Okay, they're very correlated to each other. Okay, so this blue one is the euro dollar, has been rising. It's in a buy position right now. Also in the MACD, it's in a buy position. Okay, pound also in a buy position. They're coming from a support resistance area right here. So right now, the euro and the pound, both of them are in the buy. Okay, guys. So see this right here. That was a support area. Okay, you have a MACD signal buy here. That's probably your target area right here, and the euro dollar in a buy. See the buy perfect buy here, or you can see there was a nice signal in the MACD if you can spot it right here. This is a buy. It did go up here. That was also confirmation of a buy. It just continue up. Most likely this is going to continue up as the Dow Jones is going up right now. So the euro dollar also is going up as the DXY is falling. Okay, does this make sense? So right now I'm seeing the euro dollar, okay, just going sideways, but pound is not moving as much now. See, the euro at that time was shooting up, but the pound was kind of okay. And this area, euro and the pound, both of them did go rise. Okay, so they were correlated to each other at that time, then start falling. Okay, that's at Mr. Powell's speech last week. Then start falling back. So they move like each other with a little bit of deviation, but they're very correlated to each other. Okay, so that makes sense. So line chart can you be used to compare things together. Okay. So that's how you use. Also, if you want to compare things in remove this. You want to compare Bitcoin, let's say Ethereum or something. Then you want to compare it right there. You click the compare button, ETH USD, okay, right here, and you go choose new price scale, because if you go same as scale, you're gonna move the scale in the right side in price. If you go to new band, it will just bring it here, okay. So I'm just gonna choose ETH USD. I'm gonna go and put a new price scale, or just gonna be in the same one. Okay, so Bitcoin, if you the same color, this orange one is the Ethereum, and the blue one is Bitcoin. So you can activate this feature in Trading View just from going setting right here. Okay, and you just find it. It's gonna ask you one of these things. If you show the label, okay, then you just highlight it. So it will give you the really good when you are usually comparing many things to each other. Okay, so when you're comparing too many things to each other, putting too many charts so you don't get confused, it's usually good to activate this one. Okay, probably instant. Okay, check it out where it is. Just it's here somewhere. So like this, you get the label Bitcoin, and it's moving, showing you the price. And this one Ethereum. So when you're comparing the line charts, you can say, okay, it's a really good idea. If you want to get more knowledge about how to compare things, you divide it to area. Let's say you go to 4-hour time frame. Okay, so you go and you get horizontal lines right here. See this one start falling, then you go and put Alt V. Okay, guys, if you use Alt V, Alt plus V in Trading View, that's a shortcut for vertical line. Okay, so if you guys use that's a tab audio. So that's Alt plus V. It's a vertical line in Trading View. I'm just gonna remove this stuff. It's from the old one. Yeah, whatever. So here and there, because this in the MACD also start to going back up. Okay, so I'm gonna go here. Here in this area start falling, right? Okay, here in this. Now start to study this one. Okay, I get this area to study this area. Then I study this area. Okay, then I study this area. Then I study this area. Okay. Figuring out why it's they're moving close to each other, but sometimes some of them is kind of more falling, or more they're a little bit more correlation to each other. So you just get an idea how to compare things. Say, okay, the February 21st, Bitcoin and Ethereum start to fall till 28th of February. Then from 28th of February, they start rising till this time. Both of them, there is nothing changing. They're going in good correlation to each other. Imagine we take the Ethereum off and we compare Cardano, ADA, USD. Okay. I'm just gonna change the color of Cardano right here. I'm gonna make it red or something. Oh, let's say, okay. So Cardano is not very correlated to Bitcoin. See right here, till this date was okay, and from here that was okay. Okay, so that was supposed to. When you see the red one, which is the Cardano, is going above and the Bitcoin is going down, that was a very good time to trade Cardano over BTC. So you go compare and Cardano ADA BTC, okay? And you take this one, the same one right here. See right here, this one, where the Bitcoin is actually falling. The yellow one, guys, I'm gonna make it black, okay? So please focus with me right here, okay? Where the Bitcoin was. So again here, the red one is the EDA, the Cardano against USD. The blue one is Bitcoin. The black one is Cardano over the Bitcoin. Okay. So at that area right here, Bitcoin was going really fast, and Cardano was actually going sideways. So instead of selling Cardano against dollar, which is I'm gonna zoom it, guys, just to make it clear. Okay, here. Okay, so this one I'm talking about now. So instead of selling at that time Cardano against dollar, against USD or USDT, it's gonna be very slow. You would have sold Cardano against BTC because the BTC is going up really fast, and the Cardano. So the difference between both of them is very big. That's why this black cell at that time, Cardano Bitcoin was very good. Okay. When the Bitcoin started falling, okay, the Cardano was holding ground. Okay. If you sell Bitcoin at that time, it's okay. If you trade Cardano at that time, it will be useless because it didn't move much. But if you did take the Cardano Bitcoin buy, which is the black one, that was very good. I hope this makes sense. Yes, the Alt I will invert the charts, guys. I know this one, but if I click it, it will just get the things up down. So if you want to flip things upside down, it's like a mirror. It's Alt I, but we can try it later. Okay. So anyway, here I hope this is clear. Okay, guys, that's how you can spot really good trades. So I'm gonna type this. It's a little bit hard, but once you get it, it will be super easy. So right area, okay. So BTC USD is goodbye. Okay, guys. Guys, so the BTC is a good buy. Why? Because the Bitcoin, which is I'm gonna make it also blue so we don't confuse with the color. Okay. So right, Cardano was a sell. So I'm gonna type here. So EDA USD, and that's kind of not the same color, but close enough. Okay. So that was a sell. Okay, guys. But was really good sell. Okay. Is ADA BTC. That was very good sell. Okay, guys. So really, the line chart, one of the main things is very good in is this one. You watch things supposed to move in one way. Once you start seeing deviation, that's when you spot the change. There's something going wrong. Okay, something's going wrong. Right there, which is this one, guys, right here is a good buy, no problem. The ADA, USD or USDT is just going down a little bit. But I want to grab your attention to something. The Bitcoin from here, it moved from 54,000 to 60,000, 6,000 points, okay? You can compare this as probably like 5% or something. The ADA, it moved from right here, okay, 1.19 to 1.03. About, look at that. See, that's 20% because it's a small amount. From $1.2 to $1, it's 20%, okay? But the Bitcoin is only 5% because from 54 to 60 or something, even less. Because the bigger the number, when you change something, it will be smaller, okay? But if you look at the ADA at the left side here, it will be a very small number because you're comparing which is only $1, to the Bitcoin, which is like 60,000. So imagine the huge difference, okay? So when you compare this one, it would be at the left side here, guys, this scale, okay? This scale right here. And also something good in trading view, if you look at the price on the right side, it will give you, this is a dollar, because this is Bitcoin over the dollar. So this is the symbol, okay, buy the dollar. It's $62,000. This one, $1.45. But because this is this ADA BTC, if you look at this scale, it gives you BTC at the top left right here. So it's a Bitcoin amount. So ADA compared to the Bitcoin is that number. So that's something also to pay attention to, because you are selling Cardano against the Bitcoin, not against the dollar. So you need to pay attention to this. So that was like 22 out of like 100,000. You know, you can, there is like 4 zeros right here. If you go down here, this became like 17 out of like five zeros. A huge difference right here. This amount as a percentage is much higher than the Bitcoin and much higher than the Cardano itself. So that's a much better trade than actually taking Bitcoin or taking ADA by itself. Okay. Thanks, Visionary. I hope this is easy to understand. Also, one of the good things as the shortcuts, guys, in TradingView, it's Alt plus H. It will give you horizontal line. Okay. Like I found it really nice. Alt plus H. It's a horizontal line. It's very nice. And Alt plus vertical. It's horizontal and vertical. It's very clear, straightforward. A V. So it's vertical. So it's good. Nice shortcuts to try as you're working. Okay. So we got this. Whoever took this trade from here, so the ADA was falling, okay, the red one was Bitcoin at that time, the here, okay. So we got this idea, so we can move to something else, guys. I hope this is clear. Is there any question regarding this one? Please, you guys, if you do have any question regarding this one, let me know. So the same idea, you can compare many things. Let's take the AD off, okay, and ADA BTC off, and we start comparing. Let's say compare right here CHZ BTC, okay. This is currency right here, bank. Then CHZ USD. Okay. Sorry. Control Z also works here. It takes you back, guys, where you used to be. It's like it's nice. So you compare also CHZ and USDT, the same thing. So in this one, there was no really good trade. So I'm just going to move all the drone. So right here, we have the CHZ USD and we have the CHZ over the BTC. Okay, the movement have been the same. So if I'm going to go here and just put some lines right there and right here was the MACD, was right there. I can't find a good trade. There was no much deviation. Okay, so there was no good trade in these ones to take. Okay, so I'm just going to remove this one. You can do the same thing. So if you want to trade this, compare this with gold. Okay. So you can see where this is going and the gold is going. And usually you want to take the highs and the lows of each area. You can do a good study. So that was a low of the gold right here. I'm just going to remove these things because they're taking. So right now, that was the low of the gold at 1680. Okay, guys. And you guys do remember this 1680. It was the same price. It is the same price from February 1 and about May, June 2021. At the Corona time, the gold was 1680. So just bear with me. So the gold was 1680. Okay. When the virus hit, everything was supposed to go up as a gold, right? Gold was supposed to go up. What happened at that time is investors lost a lot in the stock. Okay. And also they start having margin calls and problems. So they were winning in the gold. Okay. So they had to close their gold position. Everybody doing this at the same time. So the gold dipped a little bit. After this dip, they start buying gold again. It's a safe haven at that time. From 1680, it went down a little bit, then 1580 or something like this, or or a little bit 1620. We can check the price exactly. Then it did move to 2090, okay, 2900. Okay, guys. So 2900, like this, I guess. So 2,900, and since then it did come back to 1680. Okay, we can clear this here to make this better. Okay, you can also trade in the 1 day. So we can study the inline chart very fast. Okay, guys. Oh, so that's right here, March, right before the coronavirus. Okay, here, see that? Bang, back here. This dip at that time, here. I'm just giving you some indications, okay? So at that time, right here, this is for COVID-19, okay? Hey guys, stock market was going, dollar was falling a little bit, slightly from 103 to 101, there was nothing major stuff. Then the corona hit, everybody started losing in the Dow Jones. Just to get an idea how the Dow looks like, right there. See the Dow from here? It did crash from 29,700 to 18,800. Bang, bang, 30% in the Dow Jones, guys, 30% down. The gold was supposed to go up. To be honest with you, myself, I was expecting the gold to go up. It was very surprising to me to see the gold going down. Okay, so the explanation of this, just gonna remove this back. Control Z, guys, take everything back in trading view. Amazing. Okay. So why the gold did fall? Because investors had to close their gold position because they lost so much in this Dow Jones and equity and stock fall. Okay, guys, this one, so they had to close the gold. So the gold came down for liquidity purpose. Okay, so catch this in mind. Gold. Okay, guys, gold. Thanks, trading view. So gold right here. Many people, they're gonna use the word gold is safe haven. Very rare to listen. Gold is used for liquidity. Liquidity is just gold is used as money. Exactly. You're gonna put your money in the gold because one of the risks when you do investment is liquidity. Okay. Sorry, I have to spend 1 or 2 minutes. So in real estate, okay, you have a little bit of risk, okay, which is okay. But the return also is good. So you have a risk and you have the return. What other kind of risk you do have in this one is liquidity risk. So liquidity risk. That's really bad. What is liquidity risk basically? Why it's available in the real estate is not available in gold. It's how fast you can sell it. Okay, guys? How fast you can sell this one? Guys, how fast you and you get your money, that's called liquidity. So if you can sell it so fast, you can liquidify it so fast, then it does not have liquidity risk. Real estate, you may have something really good, but you can't sell it. So you have to sell it at a very bad price. At that time, that's called liquidity risk. Okay, so when you invest in real estate, you have to know you have a liquidity risk. Okay, guys, liquidity risk, an extra kind of risk you need a premium for. So gold has very good liquidity because you can sell it anytime. You're gonna find a buyer. That's one of the great things about gold. It's always needed. Anytime you need to sell gold, someone is gonna buy it. Okay, it's like money, just like exactly like money. If you have dollars, you go outside, everybody's gonna take the dollar from you. It doesn't matter if the dollar index at 103, you know, just like at the Corona time, or at 89, 90, just like now, you know, Angola 91 or so now. Okay, so liquidity risk. Gold does not have a liquidity risk. So people needed money, you know, got so much panic. Everybody need money. So if you are investing, say, I need my money. I need to protect my money. Get out of the market. So fund managers are gonna have so much pressure from the investors to close their position. Besides, they lost so much in the stock market, they had to close to protect the account and make up for the loss they got from the stock market. Okay, I hope this point is clear. Why the gold did fall so much here to 1416. Okay, that was surprise. Okay, guys, so right here, this fall because investors had needed money, hedge fund managers, they needed to protect their margin, okay? Liquidity needed at that time as loss was everywhere. After this was over, gold did what it's supposed to do. Right here, we get this super move. So I'm just gonna clear this one. So we knew about gold liquidity, that's something good to keep it in mind, okay? Right here, what happened? The DXY, okay? So I don't want to confuse you. I'm just gonna remove the Dow Jones. You got the idea. The Dow Jones was start rising from here. So here, so the US 30 it rose from 18,800. Okay, guys, to about 30K back or a little bit less. Okay, let's say 30K just to make it easy. It's not quite, but a little bit less. So we got about 35% increase in the Dow Jones, SPX, Nasdaq, everything. Okay, Nasdaq also was rising in a faster pace than the SPX and the Dow Jones because they do have companies to do with information technology. Okay, let's say Netflix. If you compare Netflix to Boeing at the crisis time, of course Boeing is gonna crash so bad, and Netflix is gonna do very well because everybody's sitting home, everybody's just playing Netflix and watching movies because everybody in lockdown. So that's why Nasdaq was doing much better than the Dow Jones and the SPX, and that's why also the Nasdaq is coming down now. Okay. Anyway, so the Dow Jones start rising from this point. Okay, guys, from 20 March, from 18,800. That was amazing, amazing, amazing buy. Within very little time, you were able to get 35% increase. It's trillions of money, you know. That's billions of money. Okay, just right here. And you guys know the dollar index is going opposite right there. Okay, so that's the DXY has inverse relationship. DXY does have inverse relationship with the stock market. Is that the only thing? No. The Feds came in and they dropped interest rate from 2 to 0%. Okay, so the Feds jumped in and they just killed the interest rate to almost zero. Only that? No, they added extra. They press the button, print money and more money and more money, just keep printing money, buying everything. So they don't want a global recession like 2008 to continue for years, or have a really bad impact in the global market. Because economy is just like a big tractor. Once you get it moved, it's just gonna keep moving. It can slow down, but it's not gonna stop. But once it stops, it will be very difficult to get it back to run. That's why they don't want this to happen. So DXY did crash so bad, the Dow Jones on fire. What would you expect the gold to do? The DXY is coming down, the gold is rising. Okay, guys, the gold is rising. So I'm just gonna remove the Dow Jones from here to make things easy. So at that, till this point, we knew what happened here, 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 and that's why the gold at 2090. We jumped to another game at that time. So the game of the US 10 years, okay? Okay, that's at that time, right here, August 20th, the 10 years yield in the bonds. Basically, investors start selling the bonds, and when you sell the bonds, the yield is gonna rise. Okay, they have inverse relationship. And the bad thing also, the yields do have inverse relationship with the gold. So when the yields start rising, the gold starts falling. You can see this big move right here. See this big move right there. This big move right here. Bang. Okay, guys. The gold, it did fall from 2090 very fast to 1909 because the yields did jump from okay, it was about 0.6 or so right here. Okay, this scale a little bit different. Right here at the left side, okay? At the left side here, 51. Okay, guys, you can see this scale here for the yields in the bonds at 50 percentage, I guess, 0.5, okay? It did rise a little bit to 71. And you can see right here, the gold, it did fall very fast. And you can see also the MACD was giving you a signal right here. Okay, this story did continue, it didn't end, it just started. Since then, we have been living in this nightmare. Okay, guys, so here, so that's the yields. So start to rise and the gold start to fall. Start to rise and the gold start to fall. Has been going till now. Okay. But here, March 28th, 8th of March 21, the gold start to rise. However, the yield still going, but the gold is holding ground. And the reason of this is the XY start to reverse back. So we're gonna compare the XY. I'm gonna put it here. So DXY, I'm just gonna make it green, or let's say make it black. See, guys, right here, DXY start rising from this area. Expected probably is gonna come down because it looks like there is divergence in the MACD, whatever, but we're talking analysis now. We're not educational. We're not talking what's gonna happen in the future, okay? So you can see the dollar index did rise from 89, this scale here, guys. See this scale right here is going with the gold. From here to 92, okay? So this big move in the dollar index, okay? So it did have influence right here in the gold. Okay, I hope you guys got the idea of this, how you compare things, how you can figure out the correlation, what's going, what's happening, all that stuff. Also, there was a little bit of fundamental moves. right here. Okay, you can get every single point from here, and you compare the DXY and the yields, and you see what's going on. The gold also is going against the inflation. If inflation is going higher, the gold also is going to go high. Okay, basically the dollar index is getting strong, but not in numbers, in it. Okay, so you have to take inflation in consideration. So in this area, we start getting also the Fed's given confirmation. We're gonna keep printing money. Some people do expect the gold to fall. Okay, I did give a buy signal right here because the MACD. I do expect the gold to go up, but if you break below 1680, we're gonna go down for sure, 1630 or something. But as long as we are above 1680, I think we're going up. So that's something to keep in mind. Also, Bitcoin has been taking a lot of money from the gold, so that's the line chart. I hope that was clear, guys. We got some educational stuff in this one. Okay, so I'm just gonna finish right here today. Hopefully tomorrow we can we catch something new. Hey guys, probably later we're gonna talk about the Renko and Line break and all that stuff. But right here, you need to focus on this. You need to compare a lot of things. Trading View, it's amazing. Platform is gonna give you things you cannot find anywhere else. Okay, you can flip things like. I'm just gonna give you some hints, guys, in Trading View how to use it. Really good. So let's say that's euro dollar. So that's the euro dollar right here, guys. Okay, you want to compare it to. So that's basically the euro dollar here. You can have it like this. So yeah, right here. You can say 1 divided by euro dollar, and it will flip the euro dollar. See, guys, that's 1 divided on euro dollar. It's like the alt. See, when we have the moderator right here said alt plus, sorry, plus I. This chart. Okay. You can do the same thing by actually going 1, divided by euro dollar. So that's pretty good if you want to switch it, okay? The cool thing is you can go euro dollar plus pound dollar. Okay? This is gonna give you the euro plus pound together right here in this area. That's the euro plus the pound. So you cannot find this in many places. It's one of the amazing where you can actually do real nice study. No, you cannot, compare this to many things. Okay. So a lot of things, guys, you can play with this, figure it out. It's really amazing what you can do with it. Okay. So Euro USD right here. If you compare it to DXY, this one. So they're opposite, but you cannot really see it very well. But if you take this euro and go Alt I, now the euro is inverted. Okay. So this is invert of the euro. Let's say, okay, I'm gonna make it easier. I'm gonna go USD euro, and that's also available in Trading View. You can go USD euro right here. Okay. So that's USD euro. You can compare it to DXY. I have it alt-I. Okay, like this. So this is USD euro. Okay, it's tradable on some platforms, but in Trading View, I use it for mostly for analysis purpose only. Okay, but don't confuse people. If new people are not aware of the USD euro, you're gonna confuse them too much. But use it only to compare things. So look at this. How can you compare the euro to the dollar index? Amazing, right? Amazing. That's in the daily chart. If you go also in the 1 hour chart, they go up together and down together. Why is this? Basically, because the euro dollar has 57% in the DXY, right? So it does have a very big weight. So it's gonna go up with it. It's gonna come down with it. So you really, when you trade the euro dollar, you are trading the DXY. You got that? Okay. So when you are trading euro dollar, you're actually trading the DXY. Nothing more or less. That's it. You're just trading the DXY. Thank you guys for joining me today. I hope this was educational and you guys will get more help in using TradingView, the line and the bar chart and the candle chart. Also got a lot of tricks here in shortcuts and stuff. Okay, guys, I thank you for the bonus and the coins from TradingView and Visionary. That was kind of you guys and appreciation. If you have any question, you guys, you can send me a message or get in touch. Thank you guys and have a great day.